This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Travel rush. Roads are clogged and planes are packed, even as gas and jet fuel prices head higher.
A conflicted Fed. The central bank appears on track to raise interest rates next month, but one worry persists.
Second chance. A felon learned to code in prison where there is no internet, and he's now living by a new code outside those prison walls. Those stories and more tonight on Nightly Business Report for this Wednesday, November the 22nd. And we bid you good evening, everybody. I'm Bill Griffith in tonight for Tyler Matheson, once again coming to you from the New York Stock Exchange.
Good to see you, Bill. I'm Sue Herrera. Welcome, everybody. The holiday travel rush is on. Thanksgiving is well known for being one of the busiest times of the year to hit the road, the train, or the sky. The airline industry likes to see crowded airports, and this year is no different. Almost 4 million people are expected to take a flight this weekend, the most in about a decade. And it could be a welcome sign as airlines face higher fuel costs. Phil LeBeau is at Chicago O'Hare.
The long lines say it all. The Thanksgiving travel rush is on.
We were wondering how crowded it was going to be, but when we got here, it's crazy already.
It's not as bad as I expected, actually. It's a little bit better.
I'm surprised it's not worse than it is.
Overall, the number of people flying at some point this long Thanksgiving weekend is up 5%. They may not like the packed planes, but they are paying less for their seat. In fact, airfares remain near their lowest level in years. That's good news for passengers. But for airlines, the pressure on prices has made it tougher to boost revenues. Meanwhile, jet fuel prices have been rising, which is cutting into airline profits.
Since July, we have been seeing a pretty strong surge, up over 30%. So right now, it's a race between fares and fuel. And right now, fuel is winning the race.
The mixed picture on revenue growth is one reason airline stocks have drifted lower. But for the millions flying this weekend, the best news is that the vast majority of flights should be on time. The weather is expected to be relatively mild for most of the country.
I've been checking the weather at the incoming flight and where I'm going to all week, and it's been nice to see that, no snow, no rain, no nothing. So should be smooth sailing.
I'm on the basketball team at the University of Chicago, and so we get, about a day to come home. So if there's any delays, I'm probably not going home. So no delays is, great for me.
A smooth Thanksgiving weekend in the skies with few delays or cancellations would be welcome news for the airline industry and set it up for what could be a strong holiday season that extends into January. Phil LeBeau, Nightly Business Report, Chicago.
Now, if you're taking a car this weekend, good luck. Higher gas prices do not seem to be stopping drivers from hitting the road. Morgan Brennan is in Ridgefield, New Jersey for us tonight.
Nearly 51 million Americans are expected to travel at least 50 miles this Thanksgiving week, according to AAA, the most in a dozen years. For the vast majority, that means a road trip.
A little bit busier on the highway. We started out around 4 a.m. and it was busy towards D.C. and it's picked up a little bit here heading to New York. So we're looking forward to getting there soon.
No, it's been a while since I've done this, mostly because I want to avoid this pain of travel.
It seems everybody that I've been talking to seems a lot more confident in the way the economy is going anyway, so people are spending and that's all good.
But AAA warns all those extra cars on the road could cause some big delays, with drivers in some major metro areas likely to experience travel times up to triple a normal day. Travelers in Los Angeles already know the pain, as standstill traffic snaked in both directions on the 405 freeway Tuesday night. All of this despite higher prices at the pump. Thanksgiving gasoline is at its highest level since 2014, with a national average for a gallon of regular $2.53, according to Gas Buddy.
The biggest deal is that motorists have shown that incredible resiliency to higher prices. Normally this time of year prices are trending lower. We're starting to see a lot of chatter associated with higher gas prices.
Gas climbed after Hurricane Harvey took a lot of refining capacity offline. Since then, crude oil prices have strengthened as well. Still, experts say consumers are shrugging it off because they're feeling more confident about the economy. But it isn't just more travelers hitting the road. There's more trucks as well. More freight and packages are being shipped. The American Trucking Association said truck tonnage surged 10% last month compared to the year prior. That means more trucks, more cars, and more traffic.
Horrendous. Not really until New Jersey, but then yes.
For Nightly Business Report, I'm Morgan Brennan in Bridgefield, New Jersey.
On Wall Street, the Nasdaq closed at a record despite the Federal Reserve's concern about the impact the stock market's sharp rise has had. We'll have more on that in just a minute. Trading volumes were light, as they usually are, on the day before Thanksgiving. The Dow Jones Industrial Average fell 64 points to 23,526. The Nasdaq rose 4 to that all-time high, and the S&P 500 was off nearly 2.
Consumer sentiment has cooled from a 13-year high this month, but Americans do remain optimistic about their prospects for income, employment, and inflation. And that's key for economists, since the report comes as we head into the critical holiday shopping season. In theory, of course, the better people feel, the more they spend. And that helps bolster economic activity.
Meantime, the number of Americans filing for unemployment benefits fell last week, pointing to continued steady job growth. According to the Labor Department, jobless claims dropped 13,000, remaining below the key 300,000 level, which is associated with a strong employment market. Bill?
Meantime, the Federal Reserve does seem to be ready to increase interest rates at its next meeting next month. That's what the minutes of the last meeting out today appear to be saying. But the decision may not be an easy one for some policymakers. Steve Leisman explains.
Fed officials continue to grapple with the persistent conflict of inflation that's too low and asset prices that, to some on the Fed, are worrisomely high. Minutes to the Fed October meeting show the Fed is likely on track to hike rates in December another quarter point. But the minutes also showed a broad inflation debate, with a few participants saying the Fed shouldn't hike until the data show that continued low U.S. inflation is convincingly on track towards the Fed's 2% target. And while most still think the Fed will ultimately hit its inflation target, many are also concerned that the forces behind low inflation could prove to be persistent, not temporary, as they've said most of this year. Fed Chair Janet Yellen, in a speech Tuesday night, provided a curtain raiser on those broad-based concerns.
We expect it to move back up over the next year or two. But I will say I am very uncertain about this. My colleagues and I are not certain that it is transitory, and we are monitoring inflation very closely. And I'll go back to what I said earlier about keeping an open mind and not assuming you have a monopoly on truth. It may be that there is something more endemic or long-lasting here that we need to pay attention to.
But from the other side, arguing for higher rates, the minutes show many Fed officials think the economy is operating at or above the unemployment rate that could spark inflation. They believe eventually that the connection between low unemployment and higher inflation will begin to work in the U.S. economy. After the meeting, markets continue to see a 93% chance of a rate hike this December and are about split on whether another rate hike follows in March of 2018. The minutes show some are also worried that keeping rates too low for too long could cause, quote, increased risk to financial stability, and we're worried about the buildup of financial imbalances. Translations, stock prices may be too high, and some at the Fed are worried its own low rates may be fueling a bubble. For Nightly Business Report, I'm Steve Leisman.
Meantime, corporate America's decision makers are feeling more optimistic about the economy, and there are a few issues in particular that are top of mind. Jackie DeAngelis surveyed the nation's chief financial officers and got some interesting responses.
Chief financial officers are more than just number crunchers. They make some of the most important decisions in the business community, from hiring to pay raises to investment. CNBC's Global CFO Council represents some of the largest public and private companies in the world, collectively managing more than $4 trillion in market capitalization across a number of sectors. We asked them a lot of questions, and the takeaway is they're optimistic about the future. Here's why. Tax reform. The majority answered that they think the proposed plans making their way through Congress will create jobs and stimulate growth, though they don't expect their effective tax rate next year to be lower than this year's. About a third say tax reform will increase wages, though others weren't sure. And they do have plans to repatriate cash, using that money to buy back stock. Second, there are opportunities for growth. The most attractive place seems to be on the other side of the globe. CFOs bumped up their outlook on Asia Pacific, China, and Japan from stable to improving. Third, the feel-good scenario could bode well for investors. Nearly half said that the Dow will cross 24,000 before it drops under 22K. But they do have one big concern: cyber attacks. Hackers are now viewed as the biggest risk facing business. For Nightly Business Report, I'm Jackie DeAngelis.
And still ahead, from prisoner to programmer, a man who lived behind bars for years is now making a living doing something few ever imagined.
Facebook will soon let users find out if they liked or followed pages created by Russian operatives. The decision is part of the social media company's effort to be more transparent about Russian activity on its site. The tool will be available by the end of the year, and it will track activity from the beginning of 2015 through August of this year.
As we all know, Amazon has become more than just an online retailer. It's also a major player in the cloud, which is basically a network of servers that store data. And it's pretty much the hottest thing in tech right now. Amazon's cloud unit is close to making a deal with medical data company Cerner, which would give Amazon a foothold in the very lucrative healthcare market. That report out today sent shares of both Cerner and Amazon higher. In fact, CNBC.com's Chrissy Farr broke that story. She joins us tonight from San Francisco. Chrissy, yet another business that Amazon seems to be aggressively entering here. How big a deal is this Cerner deal for them?
Well, Bill, sources are telling me that this is actually a huge deal for Amazon AWS, which has some contracts in healthcare, but it's been tough for Amazon to break in. And that's because of concerns about things like information security and compliance. So having a stamp of approval from Cerner is going to really help Amazon make that push. It's a big deal, I would say, for both of these companies.
And how does it play, Chrissy, into Amazon's broader strategy, which you've been reporting on previously, that they might enter the pharmacy business?
Well, Stu, that is the topic of discussion. Everybody wants to know, is Amazon going to do pharmacy? Are they going to start selling RX? And I would say with this, it's not really clear if it is related. It might suggest that Amazon's building up more expertise, more partnerships, and Cerner would certainly be helpful to them. But this is more of a health IT or health technology deal versus anything that very clearly would bring them closer towards that pharmacy push that we're all talking about.
Cerner's stock was the best performer in the S&P today. So what's in it for them, and why Amazon and their cloud unit as their partner?
Well, Cerner is not exactly known for things like artificial intelligence, which is more Amazon AWS territory. So for Cerner, it really makes them look like they're going to start offering more of this advanced technology. And the partnership, I'm told by sources, is initially around their population health product, and that's things like bringing predictive analytics to hospitals. So with Amazon AWS, I think it gives Cerner definitely a bump over its rivals as it pushes more into the global market and it starts more of a technology rollout. So AI potentially coming next from Cerner.
Very interesting. CNBC.com's Christina Farr. Chrissy, good job. Thank you. Have a good weekend. Happy Thanksgiving.
Thanks, and happy Thanksgiving.
Uber was hacked. The breach affected 57 million customers and drivers. Now that's a problem, but not Uber's only problem. The hack happened last year and it was covered up. And it comes as the ride-hailing company is in negotiations with investors to raise billions of dollars. Deirdre Bosa has more.
Harry Campbell has been an Uber driver since 2014, and he started a well-known blog among other drivers, The Rideshare Guy, with the goal of helping drivers earn more by working smarter. He was one of the 57 million Uber users around the world who had his data hacked nearly a year ago. But he, along with others, has only just found out. That's because Uber paid $100,000 in hush money to the hackers to hide the breach from the public and from regulators for over a year.
If Uber lied to the Federal Trade Commission while under investigation for a previous data breach and concealed this new one, that's a really serious claim and possibly a criminal one.
Uber's chief of security, Joe Sullivan, has taken the fall for the cover-up, Uber firing him and a deputy this week. He was a high-profile hire back in 2015, coming from Facebook as their head of security. In a blog post, Uber's new CEO, Dara Khosrowshahi, wrote that he won't make excuses and he can't erase the past, but he commit to learn from Uber's mistakes. But the damage is already done, and the fallout has been swift. The FTC, already investigating Uber for another earlier breach, says it is, quote, closely evaluating the serious issues raised in Uber's handling of this hack. Cybersecurity experts say that the latest could potentially open it up to criminal liability.
It's like if the cops came to your house to respond to a noise complaint, and you said, everything's fine, officers, but there's a dead body stuffed in the closet behind you. You can't lie to the FTC's face. And if that is what occurred here, that would be a different order of magnitude of these data breach stories we've been seeing persistently for the last several years.
A lawsuit has also already been filed by a user accusing the company of negligence. And a key Democrat has called for Uber to testify in D.C. The fallout has even extended overseas, with the UK's Information Commissioner expressing, quote, huge concerns. Uber says that it is in touch with several state attorney generals and the FTC, and it's ready to cooperate. As for CEO Dara Khosrowshahi, he's left cleaning up yet another mess from Uber's past while trying to repair its reputation and shore up its business as rival Lyft makes inroads. For Nightly Business Report, I'm Deirdre Boza, San Francisco.
Uber hired a unit of FireEye to investigate this massive data breach. That helped lift shares of the cybersecurity firm in trading today. Bill?
Sue, Deere's business picked up steam, and that's where we begin tonight's Market Focus. Improving demand here in the U.S. and abroad helped the tractor maker top expectations. Deere also expects that strength to continue, saying that it sees earnings and sales for the coming fiscal year to outpace analyst estimates. As a result, shares rose by 4%. It closed at $145.25. Rockwell Automation has turned down Emerson Electric's third takeover offer. Rockwell determined that the $29 billion offer is not in the best interest of its shareholders and that it presents long-term risks, including difficulty staying competitive in a very quickly changing market. Rockwell Automation shares were off by 1% to $191.02. Shares of Emerson were higher by 2.5% to $61.88. And TiVo has won a patent infringement case against Comcast. The International Trade Commission ruled that Comcast's set-top boxes violate two of TiVo's patents. As a result, Comcast is prohibited now from importing and selling certain versions of that device. Shares of TiVo jumped 7% to $18.98, while shares of Comcast, by the way, the parent company of CNBC, which produces this program, Comcast shares off a penny to $36.41. Sue?
Private equity firm Apollo Global Management is reportedly close to reaching a deal to buy the restaurant chain Qdoba Mexican Eats from the parent Jack in the Box. Reuters says a deal valued at more than $300 million could be announced as early as next week. Shares of Apollo Global Management rose nearly 1% to $30.43. Chipmaker Broadcom is reportedly considering upping its $103 billion offer to buy Qualcomm. Reuters says Broadcom may propose a more attractive bid by offering more of its own stock. The potential move represents Broadcom's eagerness to merge with its rival, even saying that it is not opposed to launching a takeover battle. The report added that Broadcom is preparing to submit a new slate of nominees for Qualcomm's board. Qualcomm shares were up 2% to $68.13. Shares of Broadcom finished down marginally to $275.37.
Earlier this year, we brought you a series called Business Behind Bars, and it was then that you met a convict at San Quentin State Prison who was learning to code. Months later, life for that now ex-convict is very, very different, and Jane Wells has that story from San Francisco for us tonight.
Can I ask what your number is? Is that
my CDC number is T31014.
He's a convicted murderer who spent years in prison.
And it's amazing to think that in a few short weeks, I'll be walking out the gates as a free man.
All right, gentlemen, let's grab your stuff.
Okay, excuse me.
A few short weeks later, Chris Schumacher did leave San Quentin free for the first time in 17 years. And get ready for this. He's now a software programmer at a San Francisco tech company.
The code that I wrote will work on any device.
Even he can hardly believe it.
I mean, like this, right? Just my mind is blown.
The story of how a felon learned to code inside a state prison where there is no internet and then got hired by the website Fandom once he was freed is nothing short of a miracle. It's the sort of miracle regularly coming out of a program called The Last Mile, started by Silicon Valley venture capitalists Beverly Parenti and Chris Redlitz. They teach willing, qualified inmates coding skills on a fake server so that when they leave prison, and many will, they can be productive members of society. Many Silicon Valley companies support the program on the inside.
But it's another thing to then have to face the decision individually to say, do I want somebody with Chris's background sitting next to me, working with me?
Fandom's Craig Palmer decided to put his money where his mouth is and give Schumacher the chance to interview for a paid internship. Schumacher went through the same process as everyone else and got the job.
I'm not going to say it was as hard as the parole board, but it was pretty tough, right?
When Chris showed up for his first day of work here in downtown San Francisco, most of his co-workers did not know about his background. They did notice his age.
There were a couple of jokes about who's the old intern.
About a week after being hired, Chris Schumacher told his whole story to the entire company.
The secret was out, right? And of course, it's always nerve-wracking. You wonder how are people going to think. But the feedback and the support has been really positive.
I was, I think, a little afraid, but it turned out great.
Yeah, I was more excited and curious than scared.
But there's been a lot to learn outside the office.
Can we take a selfie?
Like smartphones. Not long after leaving San Quentin, Schumacher and other Last Mile graduates and supporters hiked into the hills above the prison.
I do not miss that place.
Of the 30 Last Mile graduates, none has gone back behind bars. The program is expanding to other prisons and other states. For Chris Schumacher, it's been a long journey of self-improvement, which isn't over.
Where do you see yourself in 2 years, 5 years, 10 years?
Oh my gosh, that's a really hard question. You know, I see myself on this side of the wall, being a family man, being somebody that cares really about life and people, and somebody that's has a strong mind and a strong character.
He hopes to live by a new code. For Nightly Business Report, Jane Wells, San Francisco.
Still to come on Nightly Business Report, stores say they found a faster, easier way to shop. But is it? We put a relatively new service to the test.
Retailers are always looking for a way to stay ahead of the competition, and this year a number of stores are pushing a service that they describe as more convenient than ordering online and waiting for delivery. It's called Buy Online and Pick Up in Store. But is it faster and easier? Our Courtney Reagan puts 6 of the biggest chains to the test with teams in cities across the country.
Walmart and Target, Macy's and Kohl's, Home Depot and Lowe's. Each have a same-day order online, pick-up in-store option to save you time this holiday season. The good news is, no matter which Macy's we shopped, the experience was consistent. It was the same case for each retailer we tested.
The Kohl's was ready 42 minutes after order. Target was 45.
The bad news is, not all experiences were without hiccups.
So I just got a call from Lowe's that our order is ready for pickup except for one item. The tree skirt isn't available.
That happened at Chicago Lowe's too. Ordering online is supposed to be convenient, but each team thought it was the more cumbersome part.
Your pickup store, so this isn't even closest store, it keeps going back
Pickup was the easier part.
So that was pretty easy. The order was ready in 1 minute from the time I got to the counter.
So which retailer was the fastest? Target. All 4 orders were ready in an average of 33 minutes. Kohl's was second, averaging 46 minutes. Though when ease of ordering and pickup was factored in, the 4 cities put Kohl's slightly ahead of Target. Home Depot, third fastest at 1 hour, 15 minutes. Macy's, fourth, 2 hours, 11 minutes. Lowe's, fifth at 2 hours, 45 minutes. Walmart comes up last, averaging 6 hours, 32 minutes. The Dallas order was placed just before 5 p.m., but wasn't ready until after 9 a.m. the next day. For Nightly Business Report, I'm Courtney Reagan.
And finally tonight, if you plan on shopping for bargains this Black Friday, there may be one item to avoid: the Christmas tree. According to Square's 2016 sales data, Christmas trees are the most expensive on the day after Thanksgiving, averaging $66. The closer to Christmas, the cheaper the tree, which makes sense, of course, which also means on Christmas Eve, trees are the cheapest, averaging $30 on average. I'm not sure what they will look like.
Don't buy that tree on Friday. I'm making a note right now. You got it.
That does it for us tonight. I'm Sue Herrera. Thanks so much for joining us.
I'm Bill Griffith. Have a great evening. By the way, be sure to join us tomorrow on Thanksgiving for a special Nightly Business Report program on retirement. Good night, everybody.